Celsius Holdings, ticker symbol CELH, is down 37.24% in the last 30 days. And within the last 5 days, the stock has seen a drop of 12.61%. At the time of this recording today, the stock was down another 2.5%. Trading time, it's about $58.42. So one of my friends reached out to me asking, is it a good time to buy Celsius Holdings, as he is a big investor in Celsius and he has been buying Celsius for a long time. He did make a lot of money in the Celsius, but again, he's down on his current position. On this channel, we have never covered Celsius before, so I thought it might be a good time to take a look at Celsius. On today's video, we will take a look at Celsius Holdings, take a look at the technical chart, and specifically focus on the option selling to see, is it a good time to sell options on Celsius to acquire the stock, because the implied volatility is very high considering with the big decline that we have seen recently. If you enjoyed today's video, make sure to give us a like, and without further ado, let's dive in. Now, if you are an avid investor in Celsius, you most likely are up to date and current on the news. But for those who are not familiar with Celsius or don't know why this has dropped so much, this is one of the main reasons. So Celsius Holdings is on watch after several analysts lowered the Q2 estimates of the energy drink company due in parts to further inventory reduction by Pepsi. So this has caused a lot of downgrade by the analysts, not per se to the rating itself, but price target. So as you can see, most of these upgrades or downgrades happened from 611 to 617. We got by Morgan Stanley, they maintained equal weight. Then on the second day, 612, they came out, they dropped it from 75 to 68. Wedbush then came out and dropped from 85 to 83. Stifel did the same, 95 to 85. Jeffries did the same from 104 to 98. The stock has fell 30%, give or take, and that is very, very concerning. Generally, when we are looking to buy stocks, we always prefer to sell options on so that we can get premiums while reducing our cost basis when we are trying to enter a stock. That's generally the thesis, especially on this channel. But before we look into the options chain and the chart analysis, let's take a look at the options put to call ratio and how things are progressing. Implied volatility has gone up a lot, and I have also heard from a lot of folks that they are looking to sell options specifically for 117.25, which is January 25 date. We have a put to call ratio of 64, and there are more than 102,000 total open interest, with 62,000 on the call side, 39 on the put side. So we can clearly see why a lot of people are piling into the stock for that particular expiration. Before you decide to open that options contract, let's first take a look at how the chart looks like. This is a classic double top with a M. And generally when you have a double top, it tends to denote that the medium term, we will have a downward trend or the trend reversal. So it could be a reverse top where it would be a W and you will get into an upside. When you have like an M, then you go into a downside. Now I have drawn a couple lines here. We did see this small gap down over here all the way from 73 going down to 66. So this little gap that we had, we could see a gap fill. This particular line at 61.83 was went back in the early February, which became, initially it was a resistance all the way going from December to mid-January before we saw an uptrend, and they broke this particular line and made it a support line. What we are seeing right now is the stock has broken through that support line. Today's trading with this doji candle denotes that market is kind of assessing where should the stock head to. It is not clear if 58 level is going to be held or not, because there is nothing going on here. There is not much support line. We could draw a support line around the 55.68 where we saw some level of support over here back in January. But if that support is not held, we will have a big support line at 48 and 11. There is big volume shelf starts to come in around the 58, and then it really goes up around this area of 51.97. So if you are looking to get into Celsius stock, there are a couple things that you need to watch. You need to see if we see a trend reversal and it is able to break through the 61.83 and stays above 61.83. Then you can go ahead and sell an option at 61.83. If you open at the current levels and the stock goes down further where we see the big volume shelf coming in, that's almost a 13% drop from the current price. I would not recommend selling in options at this level until we see some trend establishes. Right now it's a falling knife, and generally we should stay away from a falling knife until we have some clarity on the stock. Now, yes, the stock is oversold. It is below the 30 mark. It is currently at 23, 25. In the put to call table, we saw there were a lot of contracts that were opened for January 2025. Look at the open interest at 58. We have about 2,000 contracts. You go to 50, you have about 2,300 contracts, and the delta is about 26 here and 37 here, and the premiums are very elevated. You get about 10, 15 here, so your effective cost basis becomes 48 or so. If you open a 50, you will get about 6, which makes your cost basis around 44. So 44 kind of brings you around this level, which is still above that, and 44 gives you a good support line. But here's my concern: when you do that, for long term, we don't know how this news will play out unless you are very confident about Celsius on how this news will play out, and eventually things will turn out for the best. But if not, I would recommend opening weekly calls here, where you can take advantage by lowering your cost basis. So you should play a little bit safer here, maybe a delta of 20, where you can open a 56. So at 56, we will be somewhere around here where you still have a good volume shelf. With 56 in a week, you will get about 0.56. So your effective cost basis becomes 55, 40 something. You can always look at the monthly options over here. At 50, you will get about 98 cents. So that you lower it by $1. So it becomes 49. So definitely, I would say before you dive deep into this, I would recommend to see how this trend gets established on Celsius. Do we see an uptrend? Do we see a rejection at 61.83, or do we see further decline and breaking 54.22? And if it breaks 54.22, the next level of support will be 48.90. So there you go. That was my take on Celsius stock. Hopefully that gives you some idea on how to trade this. And if you are looking to add to your long-term position, you can definitely look to open a long-term options contract. Before you do that, I would recommend let the trend get established and then sell options.